What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look here at a company, IonQ, I believe it's called, ticker symbol IONQ, listed here on the New York Stock Exchange. Now, the company right now trading at $14.41 a share, down 81 cents, a little over 5.25% here on the day. Let's see what's going on. So this company, I believe, is in the quantum computing space, very similar to D-Wave Quantum that we looked at recently. This company recently got a deal with Air Force Research Lab, $25 million deal to supposedly set up, I guess, one of their machines and provide services. It says it was upstate New York, I believe Rome, New York. We have a market cap now of $2.9 billion, with the company bleeding like an animal, with even expectations expected to go lower moving forward. Right now, the one thing that the company has going for them is that for the last about 3 quarters in a row, minus that quarter, of course, you can see that they have been coming in above analyst expectations on the revenue side, which I said, in my opinion, looking at a company and the way they grow, I would probably put revenue slightly above the profitability side of the earnings. So, of course, the more money a company makes, technically, the more profits they should make. However, of course, with expenses going on, obviously some companies still end up with losses, not profitable at all. But of course, on the flip side, a lot of these companies always talk about, building out new facilities and whatnot to, streamline production and increase efficiency and reduce costs. So, okay, let's say hypothetically several years down the road, they get all the losses in order. Okay, fine. What's killing me is the fact that you all took this stock way too high, way too quick. As you see here, 6-7 months ago, the stock was at $5 a share and apparently hits a new high of $21.60 and has basically immediately pulled back, and now it's sitting here at about $14 a share. Let me tell you something. A company that brings in $3-4 million a quarter with these types of losses that we're about to look at, their stock doesn't deserve to go from 5 to 20. So I have to assume that this was one of those Wall Street bet short interest plays that all of you guys jumped into. And listen, if you bought this stock at 5, 7, 11, and you rode it up to 18, 19, 20, listen, more power to you. However, in my opinion, if you didn't take profits off the table, you may turn out to look like the biggest schmuck in the world. And again, a company with these types of losses does not rally 300% in 6 months. That just does not happen. You have a market cap of $2.9 billion for a company bringing in $4 or $5 million for a quarter. We don't even have to do the comparison. You already know what I'm going to say. This stock can easily, in my opinion, take a 50% haircut from this level, and it would not only be justified, it might just be the beginning. In my eyes, I would personally bring this stock down to sub $5 again, where it was before this entire BS rally, and actually bring it back down to earth. And if you want to hate on me because you made money in the position, or if you own shares of the stock at a higher price and this is not what you want to hear, again, I'm never going to sugarcoat anything. I'm always going to call it like I see it. And sometimes you need to hear the cold, hard, grounded truth. And the bottom line is, if you and I had a business right now and we were making $15, $16, $18 million a year, no one is going to come along and offer you $2.9 billion for that business. That is freaking simple logic and common sense. So for you to sit here with this overinflated stock to try to debate with me that this stock is going to go higher, you're going Looney Tunes, my friend. That's the way I'm looking at it. We have losses just continuing and decreasing. Look at these losses on this company. You bring in $4.29 million. It costs you $27 million to do so. Now you bring in $5.5 million. You lose almost $44 million to bring in $5 million. Now, I'm sure, again, down the road, several years from now, this company may definitely turn it around. I know they have the potential. They're talking about, backlogs of orders, and they recently increased the full-year guidance, I think, a couple of bucks more than what they recently anticipated. So this is what I'm saying. The company has a couple of positive catalysts on the back burner. The problem is you guys took it to the moon for absolutely no reason. So now it has to come all the way back down to earth before we can even potentially consider reanalyzing the situation and reevaluating and seeing if we should get in at a better price. But see, like something like here, like this fib here, 723, it should be there by the end of next week, in my opinion. This stock should just immediately start chunking down and coming back down to earth. And again, even dropping 50% back to 7, that would still be a market cap of $1.45 billion for a company that is estimating to do about $18 or $19 million for this year. Now, anytime I looked at a lot of these other random under-the-radar stocks that everyone pumped up to the moon, and I said that it was tremendously overvalued and it should be selling off, usually, even if you go back to a lot of the other meme trending stocks that I did videos on, it seemed like about 8 out of 10, 9 out of 10 times I was right, and the stock began to chunk down, and everyone couldn't believe it, and it caught them off guard, and they don't understand what's going on. I understand what's going on. As I laid out before, a company that makes $19 million a year and probably loses, $80 million to make it isn't worth $2.9 billion. I mean, that's just simple logic and common sense here. Look at these huge chunks down. And again, listen, I appreciate the fact that revenue is growing, went from 2.1 million back in 21 up to north of 11 million here in 22. However, again, 11 million for the year, $2.9 billion market cap. I mean, you really don't have to be a rocket scientist to see what's going on. What blows my mind is the fact that all of these institutions recently increased their price targets drastically. So maybe I'm missing something. However, again, at the end of the day, if you want to bet on mass psychology, that, in my eyes, is basically a gamble. Because regardless of what you may read online, you never really know what the majority or what the bulk of investors are actually doing. And in my opinion, there is really nothing you can tell me right now to indicate that this stock should be trading higher than it is right now. Now, look, we go back, 2 weeks ago, as it says here, $25 million computing deal with U.S. Air Force Research Lab. Listen, that is phenomenal. That is an absolutely phenomenally positive catalyst. But at the end of the day, it doesn't justify a $3 billion market cap, so it really doesn't matter. Shares rise 7% after probably being already overvalued. What was this? Yeah, 27. So the stock was $13.5, $14, and then the next day it hit a high. Look at that, top of the screen. Hit a high of $15.62 because they got a $25 million contract. Man, you guys are crazy, man. In my opinion, again, I wouldn't touch this with a 10-foot pole. This should drop, in my eyes, about 50% from where it is now before we even should consider reanalyzing the situation. I know they're doing a lot of collabs. Look, if we come back here around last earnings, you can see Goldman Sachs increases price target to 14 from 9, right? Yeah, we're just 50% off. So we have to raise our price target by 50%. Look at Morgan Stanley raising the price target, what, 130%? Oh, we thought it was going to 7, but now we think it's going to 16. This is what I mean. These are Johnny-come-lately analysts, in my opinion, okay? You guys probably got this going on StockTwits or Reddit or something like that. It started rallying consistently. Look at this, over all these months, going from 5 to above 20. And now, while the company comes out with massive losses, but again, they did beat on the revenue side, I do give them credit, the company comes in with a whopping $5.5 million, and all of a sudden, the guy at Morgan thinks instead of going to 7, it's going to 16? I'm telling you, I wish I had the same drug dealer as a lot of these analysts. I'm going to tell you that much right now. Benchmark to 20 from 17. 17 was already high. And it looks like the individual investors pumped the stock up to the high teens to begin with. This guy at Benchmark should have just maintained his price target, in my opinion. But anyway, going off on a tangent here. But long story short, again, if it was really rock solid, it wouldn't continue dropping. And if it really is supposed to be above 20, it wouldn't have immediately crashed 40% or whatever it is back to sub 13. Look at that. That took what, like 6-7 days or something. And the stock went from ridiculous highs of 2160 down to sub $13 a share. So this is what I mean. Just use some simple logic and common sense here. If it's supposed to be at 20, it would have maintained 20. This looked like a key level, in my opinion, about 1657, and as you can see, it immediately broke through it and then broke right down below the moving average. Rejected on the moving average here, got above the moving average, basically right to that point. What's the high here? Look at the high. 1660. Where's my mark? 1657. So it hits my mark, gets above the moving average for no reason, and then immediately rejects and starts chunking down. And just in the last 3 days, the stock has gone from 1660 to 14 and a quarter. Let me tell you something. Stable, consistent, growing companies don't have swings like that. But again, I understand I may have a little more time and experience than some of you, so I can appreciate the fact if you don't see it my way, but I'm looking for a 50% haircut here. And if you want, we can analyze the financials, but I'm telling you right now, they're really not looking too good. I can appreciate the fact, again, that they're coming in above analyst expectations, and even here, I know they raised, I think they said they raised the guidance. They're looking for like 18.8 million to like 19.3 million or something like that. So they may in fact meet or potentially beat this mark here for 2023. However, it's the bleeding that has gotten out of control. In 2021, the company's sitting here with 400 million in cash. 2022 down to about 40 million. Now again, I can appreciate the fact they may still be in their infancy. They're going to sign some deals down the road. Everything's going to even out at the end of the day. I can appreciate that. But again, I wouldn't personally force my way in at 14 and a quarter if I basically believe I can get the stock for 50% cheaper. I would be very, very patient with this situation in my eyes. The one really big positive that we're seeing right here is that short and long-term assets are significantly outweighing liabilities. So in my eyes, that is actually a phenomenal positive, a phenomenal feather in the cap that IonQ has going for them right now. Again, we could see revenue consistently increasing. Look at this, 7 quarters in a row. Absolutely phenomenal. Look at the cost of goods. Starting to get out of hand, though, just looking at this last quarter. Before that, it was kind of all right. Now it really increased, and it's potentially starting to get out of hand. Revenue minus cost of goods sold gives us gross profit, as you see, consistently decreasing the last 2 quarters in a row. Now look at the operating expenses. Has absolutely exploded. Up from mid-20 millions, now we're up to mid-30 millions. Gross profit minus operating expenses gives us the operating income. The company now has its lowest level of operating income going all the way back to 2021. And what have they done? They've increased revenue by a few million, when operating income has tripled. I'm telling you right now, down the road, several years from now, this may turn out to be a brand name in the space, and you may kick yourself wishing that you bought it. However, again, in my eyes, I am seeing really no reason as to why this stock should be held up right now. We have liabilities actually increased now to 53.6 million, which is technically, if we just going back here just to December of 21 here, you can see over the last 6 or 7 quarters, this is now the most liabilities that they've had on their balance sheet. Yet, if we look at the assets, the asset value has been consistently decreasing quarter over quarter. And now, of course, assets minus liabilities gives us equity. Now the equity is sitting at 523.25 million. Which, as you see, it's basically been consistently decreasing as well, quarter over quarter. Assets going down, liabilities going up. Assets minus liabilities gives us equity. The lower the equity goes, the lower the book value per share goes. As we see here, several quarters back, above $3 a share. Consistently, slowly dipping down, sub 3, 289, 284, 276, now 259. That's why I was saying it was at that $5 level, may have been a little overvalued in numbers, but I can appreciate that fact. Oh, we'll keep it at $4 or $5, roughly 2 times book value. That's more understandable. With the stock here having huge red chunk down days and still trading 6, 7 times book value, that's what I mean. These people are crazy. These people are crazy. But basically, again, definitely a struggle here. This would definitely be more of a long-term play than a short-term play, unless, of course, you're going to buy puts or short shares, in my opinion. But overall, me personally, in my opinion, I do not like this at this current level at all. Look at the price to sales, trading 187 times sales, the most since going back really to the tail end of 21, beginning of 22, and of course since then you can see over the last 5-6 quarters this is the highest it has been. Price to book, 5.87 times book value. This is now the highest price to book ratio going all the way back to 2021. So this is why I'm saying I'm very confident, in my opinion, that this company is severely overvalued at this level, and it has to go down before it goes up. The return on assets, not the lowest it's been, right, was minus 20+%, got all the way down to less than minus 8%, and has since basically almost tripled and got back to minus 19%. The return on equity, same thing, fell off a cliff along with the return on invested capital. Gross margin percentage a couple of quarters ago was above 40%. Now it's just slightly above 20%, so that's roughly a 50% drop just over the course of the last 2 quarters. Operating margin percentage, we looked at these numbers before on the balance sheet. You can see here, minus 600%. They're losing $6 for every dollar that they're bringing in. And again, in the long term, it could be good, but right now, none of these fundamentals are justifying a stock maintaining its value or even potentially rising in value. Anyone, in my eyes, right now, who's telling you to buy shares of IonQ at this current level or higher a few dollars a few weeks ago, these people are absolutely Looney Tunes, in my opinion, and I feel that you should not be listening to a single word that these people are saying. EBITDA, once again, earnings before interest, taxes, depreciation, amortization, as we see, sitting at over minus 550%. That is not helping anyone out. And of course, our net margin percentage now sitting at almost minus 800%. So aside from the very, very slight increase in revenue and the very, very slight beat on the full year guidance that they raised, this company has absolutely nothing going on for it, in my opinion. And even 2023, look at this. We're looking for a jump in revenue from $10.5 million. Again, they beat for the last 2 years, phenomenal. Missed on 1 EPS for the year. But look at this. Now we're expecting a jump up to only $19 million. Yet somehow losses are going to almost triple, going from minus 25 cents to minus 72 cents a share for the year of 23. And honestly, the growth in revenue is really nothing to write home about. 24 up above 36.5. Look at this, 87.5, 187 million. Now look, if they actually show that growth in business, that is absolutely phenomenal. I wish them the best of luck. And again, if you're holding this for the long term, I hope that something gets announced somewhere in here and the stock absolutely explodes for you and your family. I wish you all the best. But at the end of the day, even if this company right now brought in $187 million for this year, they would not be worth $2.9 billion. That is just a fact, really, not even an opinion. I mean, if you really think about it, you're talking, what, 14, 15 times annual revenue? And also, look at this. Look at this. Revenue could go from, look, losing 25 cents a share on 11 million. Okay, keep those numbers in mind. Losing 25 cents a share on 11 million. Losing 50 cents a share on 187 million. That is embarrassing. These companies, I don't know who's running these companies, who their CFOs are, who are the analysts that are keeping an eye on a bunch of these stocks. I have no idea what's going on, but as of right now, even with these 2026 numbers, this stock is overvalued in my opinion. And the fact that, again, you had people, whoever it was, Morgan, come out, oh no, instead of 7, it's going to 16. You're out of your mind. These people are strictly playing into the hype that you are giving it. I promise you. Because that guy saying it's going to $7, in my opinion, is overvalued even at $7. But he changed it from 7 to 16. I promise you, it's only because you guys took it from 5 to above 20. So if this wasn't, trending on StockTwits or Reddit or something, none of you would have bought shares in this stock. And honestly, in my eyes, you would have been better off, because apparently, even if the company increases revenue by 15, 17-fold in the next 2 to 3 years, apparently they're still going to be taking losses. And also the losses, as you see, in 24 and 25 are going to be significantly more than they are now. So this is why I'm saying I am seeing absolutely zero urgency right here to buy IonQ. Even with the new deal there with the Air Force, $25 million, again, that's all great, that's fine and dandy. But at the end of the day, this stock should drop back down to where it was before this rally, $5 a share. That's where I feel this stock should be, and I stand by that analysis. And we switch over here to stock charts very quickly if you want. We can take a look at stock charts. And as you see, RSI is pulled back to a little above 44. It was rising. Again, we had that rejection off that key level, so I feel it's probably going to pull back down there. And in my opinion, of course, should break down and get down to there, that 200-day moving average of 977. You can see now with the drop, looks like the MACD is curling and potentially about to cross back to the downside, which is going to add to the sell-off in my eyes. The stock should definitely get back to single digits. It's really not even a question. Here on the RSI and the weekly, you can see it's a touch over 53.5. Definitely still has room to drop down. Looks like now with the stock dropping down, now it's sitting at 1422. Had a low of 14.19. If markets do continue to sell off here in the next 90 minutes and this closes near the low, then it's actually going to form what is known as a bearish hammer, and it's also going to close more than likely below the mid-Bollinger Band here of 1422. So if all that does happen in the next 90 minutes, then that is all going to be bearish indicators in my opinion, and that is going to add to the drop down here. Now on the daily, the 50-day moving average was, on the daily, the 200-day moving average was 977. And that's why I feel it's even going to break that over the next couple of weeks potentially. And then the 50-day moving average here on the weekly of 887, that's still too high as well, but you're going to have the bottom Bollinger Band and the 50-day moving average. It looks like they're going to have a little divergence here. They're going to meet up inside of maybe the next week or two, so that's why having a level there of like 890, 880, where they're all meeting up here, that might be where they bring the stock in the immediate short term. Obviously, the MACD was out of control because worthless companies do not deserve to rally from $2 to $20. So now it's slowly going to give all of that back, and everything, all the technicals are going to start lining up with the fundamentals, in my opinion. And of course, on the weekly, we see just a couple of weeks ago, our MACD finally crossed to the downside, and the stock has chunked down since then, trying to bounce off this mid-Bollinger Band. But again, in my opinion, I see absolutely zero reason to why it should bounce and rise back up to the high teens, low 20s. It really, really shouldn't happen. The only catalyst I can think of, in my opinion, would be maybe if like a Buffett or a Carl Icahn stepped in and took 10, 12, 15, 20% of the stock. Even then, of course, they would be buying it at an overinflated price. So even if they're buying 10% of the stock here at 14, again, in my opinion, the stock should be at 5. So even if that immediately added some massive like 20% explosion back up to $19 a share, it would probably immediately be given back. So again, I know if you're a shareholder or if you own it at 18, 19, this is definitely not what you want to hear. But again, I'm a realist. I call it like I see it. I'm not going to review a stock that you all have trending, that you're all looking at, that you all want to own. I'm not going to review a stock like that and just say, oh yeah, the hype is real, you guys should buy it, it's a buy no matter what, watch 5 years from now, watch. You can't think like that, in my opinion. Because again, you are going to save yourself potentially years of heartache and stress if you buy it up here at these overinflated levels. And again, it could bounce and go up to 17, and then you can say, I knew it, that guy was wrong, I should have bought it. But again, in my opinion, this whole thing should not have happened, and the stock should be here. So think about this. If you buy it now at 14 plus, and let's say I'm right, and it pulls back to $5 over the next 3 to 6 months, now it's more down to earth. Now the fundamentals are lining up more realistically. Now you're going to have to wait for them to consistently increase guidance and beat earnings and narrow the losses that they've been posting, right? You need all of that to happen, and it's probably going to take 2 to 3 years potentially for the stock to come back down to 5 and then slowly increase back to the mid and high teens where you might have paid for it. So that's why I'm being pretty adamant and being pretty passionate here in this video, because again, I know I'm like a broken record and I may keep saying something over and over 5, 7, 10 times, and a lot of you may not even still be watching this video after this time. But I will say this, a lot of these other trending hype stocks that you guys loved, I came out like a realist and said, no, it's overvalued, it's supposed to go down, not up. I may have had a couple of arguments in the comment section with some people. Of course, never any animosity or anything like that. We're all entitled to our own opinion. But again, there are a lot of stocks that you all liked, that you all heard online were going to be good, that you all bought because it was trending on Reddit and StockTwits. And then I made a video saying it would shit the bed, and then that's exactly what frickin' happened. So, that's why sometimes you got to take a step back, separate yourself from the noise, what people are talking about in a Discord, who and their brother is talking about the hype behind some $2 stock or something like that. Take a step back, do a little due diligence, do a little research. If you're not 100% confident in a situation, sit on your hands, give it some time, be patient. Just because the market's open and you have cash doesn't mean you have to buy something. And that is probably the best rule and piece of advice that I can give you, especially when we're looking at a situation like IonQ Inc. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. Share the video, like the video, of course, helps out the algorithm and everything like that. And of course, more importantly, push the subscribe button. I will do analysis videos on, these under the radar stocks like IonQ. I'll talk about brand name companies like Campbell's, Coca-Cola, Disney. Also, Discord link in the description of every video if you guys want to join the Discord. In my opinion, I strongly advise you to. I've been making some phenomenal calls, especially over even the last 2 to 3 months. I've been absolutely killing it. But more importantly, I'll do all of that for you guys. Just do me a favor. Push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you in the next one.